Welcome, and today is June 4th, 2024. June 4th, 2024. This is your daily Worldview Financial Report. Worldview Financial Report. My co-hosts are Mike Weiner and Swiss America's Wes Petes. Both of them are with Swiss America, by the way. And we're going to talk about several things. Take a look at the headlines today we're going to cover. Here's one of them right here. NYSE glitch. Well, I guess we're not plugged in. They'll get me plugged in. NYSE glitch sparks volatility in dozens of stocks. We'll talk about that. Job openings unexpectedly fall in April to the lowest level in 3 years. We're also going to talk about U.S. house sellers are cutting prices for the first time in over a year. Well, I would guess so. A lot of homes sitting on the market. I have several friends that are realtors. Talked to one of them yesterday. Lots of houses sitting on the market, not even getting showings. Just a few years ago, there would be 18, 19, 20 showings, and in some cases, that many offers within a matter of just a day or two. Now, those same houses are sitting with zero showings for weeks. So homeowners are now cutting prices, trying to attract in buyers at the high-level interest rates. Of course, we think they're high level. Just ask Mike Weiner about high-interest mortgage from back in the 1980s at 21%. But here we go. Mortgage rates increased to 7.03%. We'll touch on that today. Also, we have a clip we want to play, a couple of video clips that we want to play, actually. And let's see, what else do we have here? Job openings tumble with hiring stocks at 2018 levels. There you go. And then finally, big tech companies unplug stock market from reality. Let's get going. Guys, welcome back to the broadcast. Thanks for being with us.
Thank you.
How you doing, Wes? You're back from playing golf in San Diego?
I am back. Yes.
Good to see you back.
20 degree temperature swing. It was beautiful there.
Obviously, it's hotter in Arizona than it was in San Diego, right?
Much hotter.
That's about 70 degrees year round in San Diego, right?
Yeah, it was like 67, 68.
Why do you live there? You could live anywhere, right?
Yes, I could. I have in-laws that that we have to stay close by.
Okay. All right. Otherwise, you could come here and live right outside the Mid-South and be in the studio with me every day. Wouldn't you just love to do that?
Tennessee's beautiful. Absolutely.
Yeah, I'm on the ugly side of the state. Just so you know. Just remember that. Everybody thinks that Tennessee all looks the same, like Sevierville or Gatlinburg, Smoky Mountains. No, sorry.
Yeah.
All right. You doing all right, Mr. Wes? Mr. Weiner?
I'm having a lovely time, really.
Good for you. We held down the fort while Wes was gone, working on his golf game in Tan.
Correct.
So we're all back together. The three amigos, we're all back together. All right. We've been working together, what, guys, 16, 17 years now?
Correct.
Wow.
Watch go, Brandon. So
It's been a long time. Well, let's talk about this. Let's talk about this glitch. NYSE glitch. New York Stock Exchange glitch sparks volatility in dozens of stocks. What happened, Mr. Weiner?
Well, the bottom line is you have a stock market that's being controlled by computers. And when that happens, rather than open outcry, you have this type of result. People versus robots. This isn't even robots. These are computers. The problem is when it happens, they don't take issue to it. When Berkshire Hathaway went down to $156 a share, needless to say, I immediately jumped on it and bought 100 shares right away.
What is it normally at? Remind our audience what it normally is at.
Thousands. I'm not sure exactly the amount. Some
in the tens of thousands,
amount.
Right? A share?
Yeah. So, yeah, it could be in the six figure. I don't really know. But place the order. They confirm you on tape. And then 2 hours later, they call you back and say, we canceled it. In my day, you can't cancel it. You eat it. But they just went ahead and did what they wanted to do. It shows you the fact that not only is this market controlled, but just as well as they invalidated me, they can invalidate you any way they want. They can sit back and shut the market down. It's not a free marketplace.
So what you're saying, Michael Weiner, is that the New York Stock Exchange, which is correct me if I'm wrong, is the New York Stock Exchange is actually a corporation, right? It's a business.
Correct.
It's a corporation, right? All
Correct.
right. So their equipment messes up. You rush in and buy, and instead of them having insurance that makes up for the difference or the glitch or whatever, a deal's a deal. You made the price, I bought. Instead of them saying, whoop, that mistake is on us, we're going to have to file with our insurance company due to this glitch or eat it, they said no. So in other words, what you're telling me is they can make the rules up as they go. Is that what you're saying, Mike Weiner?
Absolutely. That's exactly what they did. And it wasn't just the New York Stock Exchange, it's members of the exchange, wirehouses, brokerage firms. They seem to have a very interesting view on how they do the business. And quite frankly, here at Swiss America, if we lock in a trade, we're locked. If we make that mistake, we eat it. I just don't understand. I knew that was going to happen, to tell you the God's honest truth. I knew it was going to happen. But why did I know it was going to happen? Because of the lack of credibility of the exchange. It's no longer what's called open outcry. When you see the movie Trading Places, you see looks like thousands of guys and gals on the floor trading. I had friends that work in the Chicago Mercantile Exchange years ago, where Chicago Citicorp had a couple hundred brokers on the trading floor. Now they have 2. Why? Because they don't need people on the floor.
Computers do it.
Computer.
Yeah.
And when computers do it, they can make things happen the way they want to. So we have a wonderful economy and a wonderful this, and you turn on the news and everything's great in the stock market, but the people are suffering on the streets. I don't get it.
Yeah, well, yesterday we showed the shanty towns, didn't we? The
Yes,
Biden shanty towns. Hey, take a look at this screenshot. Berkshire Hathaway. It's really worth what, $614,000 a share?
There you go, 6-figure.
And you tried picking it up for $150 a share?
That's right. I could have been on the beach with Wes. You know, it's going to tell you.
Wait a minute. Get that image out of my head. Come on. You two guys on the beach? I mean, come on.
Well, you know what we're probably going to find out.
But again, I would not be any better, just for the record. The older I get, the more sharper my clothes get. You know what? Clothes make the man. That's what Michael Reagan said his dad taught him. Michael has told me multiple times, my dad used to say, clothes make the man. And the older I get, the fancier I dress. It's a great distraction. Don't look here. Look at his tie.
There you go.
I was on Coronado Island, Brandon. I was out there training with the Navy SEALs for a couple of days.
Were you really? So, I don't buy this. I'm not buying it. I'm not buying it.
Yeah.
Oh, gosh.
But
yeah.
This whole glitch thing too, Brandon. We'll probably find out in a couple of days. Someone will walk outside in Montana and look up, and they'll see a big Chinese spy balloon up in the air. And if you remember last time when we had glitches with the FAA and the stock market and banks had issues, all within a 2-week time frame. It's about the same time we found out about China circling around our country, checking out our missile silos and military bases. Not saying that happened, but it wouldn't surprise me one bit.
Well, no, I think it did happen, and we've had military experts on saying that's exactly what they were doing. They were checking out our nuclear triad, our subs, our silos, and our aircraft.
Well, and who's to say they weren't doing a couple little tests with the stock market? Could we do that? Yep, that would work. With the banks, could we do that? Yep, we got that down too.
Well, we know that Economic War Room, Kevin Freeman has written extensively over the years about the goal of using algorithms and other things to come in and disrupt our stock market and crash our economy. I mean, a digital run on the bank. Remember the clip we've played? Remember the clip we've played of the member of Congress talking about the digital run on the bank? I mean, I never tire of playing that because I think we're going to see that again. But all you have to do is have one of these computers go haywire, and you start, or be done deliberately by an enemy state or our own CIA, and you end up with a digital run on all of the markets.
Right. I mean, the next major conflict, when we go to a major conflict, warfare is much different today than it was when I was in during the first Gulf War. There's going to be a cyber warfare, digital. I mean, if they, an EM, people are very concerned, and rightfully so, about an EMP. If our supply chain gets shut down, I mean, the list goes on and on. Here in Arizona and other parts of the country, Nevada, where it's, we have these heat waves. Imagine if the grid went down in July or August, all the deaths that would cause alone. So that's why I tell people, have money outside of the bank, have 3 to 6 months of living expenses in cash outside of the bank. So if something happens, you have something to fall back on, because most people don't carry or hold cash. Everyone's using their debit cards and credit cards. So that's one of the parts of being prepared, is have an emergency fund in cash at home.
Let's talk about the stock market. What's your background, Mr. Weiner, in the stock market?
Well, I started off after college at Hornblower and Weeks, which was using a old narrative, a hoity-toity firm. They were the #1 firm in the country with the ultra rich. We had Henry Ford II as a client. We had the Ford family as clients. I actually took papers to the Ford family estate in Grosse Pointe and went through there, met the butler, and had to have Mr. Ford sign the papers. I got to meet him. I can tell you that the biggest thing I learned when my first day on the job, I took my diploma in there and my 3-piece suit from Robert Hall with 17 pair of pants, and went in there, and boss turned to me, a guy by the name of Horatio Weeks, who was quite famous. He handled the Mott family, which were the founders of General Motors. We were in the General Motors building, and he turned to me and said, "Young man, if you send people their money back too often, we're going to fire you." And I looked at him and said, "What do you mean?" And he said, "We don't send people their money back. We control their money. If there's a problem, just tell them to hold on. It'll come back." So that's how come every time there's a crash in the market, there's blood all over the streets, because nobody warns you. They're not going to warn you. They're going to let you take the hit, and then they will tell you to hang on. And then, gold's there to help sweep it up. The problem that I have right now, in all honesty, is what if the people running this country are not as concerned as what were in the past about bringing it back? What if they want to keep it down, like COVID? What if they want to make you controlled like COVID? We're finding out yesterday from Fauci that everything on COVID was a lie. The masks were a lie. The kids' masks were a lie. 6 foot apart was a lie. I mean, the injections, who knows? I mean, I'm not a victim of those injections. Nobody's going to stick me. I took the polio vaccine.
I didn't get the shot. I didn't get the shot. You didn't get the shot. Wes, do you want to? You clean, Wes?
What's that?
You didn't get the shot either, did you, Wes?
No.
Look at this. All 3 of us are clean specimen. Look at that.
That's correct.
My immunity, I did have COVID 3 times.
Me
so
too. Me too, 3 times.
Yeah. I had it twice, but got monoclonal antibody infusion, which they stopped. I'd probably be dead now if I'm not getting it. But I think right now, I think the stock market is not the place it used to be. I think the people working in it, the financial planners, like we said yesterday, Brannon, my dad used to say, if somebody wants to tell you to make a lot of money, make sure they got a lot of money in the first place. Somebody drives up with a Honda and is going to give me financial advice, I'm going to look at them and go, seriously? Oh, really?
Maybe they're just frugal, Mike. They're frugal.
Yeah, maybe they're frugal, like the millionaire next door wearing a Seiko and driving a Caprice Classic back in the day.
That's great, but if they're not frugal, I want to make sure that what their track record is and just check out the whole 9 yards.
There you go. All right, let's talk about the stock market today, because I have young college age, 20-something young people in the control room, and some of their friends and family members. They're all so excited about the stock market. And I try to tell them, wait a minute now, how much of your liquid cash do you have in the stock market? And most of them have pretty much everything, because they have seen their net worth go up. They put it into stocks like, what's it called, Logan? NVIDIA? NVIDIA. Tell me about NVIDIA. I don't even know what NVIDIA does. What do they do?
They're the largest chip maker in the world, and
so what are they going to do when China takes over Taiwan? Boop, boop.
And they're big in the AI movement. They're big time in the AI movement as well.
So NVIDIA was at what? What was it at a year or two ago, Logan? You bought it at 300, Logan? What is it at now?
It went up to close to 1,000.
Now over 1,000.
Yeah.
It's split.
But Logan is smart. He's diversified. He doesn't have his entire nest egg in there. But I do know young kids that do. They think the market's, this is the way it's always been, because they're in their 20s. They don't know. And I'm like, wait a minute. You better be hedging. What are you going to do when this thing corrects and goes down 50%, 60%? Oh, it'll pop right back up. I said, I think if you go research 1929 stock market crash, correct me if I'm wrong, gentlemen, but didn't some of those folks not get made whole until the 1960s?
Yeah, it took a long time. Absolutely. Well, now, the thing with Logan is he is young, to be able to have time for that, even if the market did take a big hit. for him to have time on his side to recuperate his losses and keep investing in dollar cost average. And you're buying when it's low, you're buying when it's high. But the big concerning thing, Brandon, right now is this is a period of time we have never gone through, we've never lived in. Many of these financial advisors and stockbrokers have seen nothing like this. When you're talking about countries de-dollarizing, which could potentially lead to hyperinflation, that's very significant. So it's not business as usual. This is a new time that we're living in. So again, people, I always say it, you have to be proactive. And with Logan, being as young as he is, it'll work out for him in the long run. But at that point in time, we're going to be dealing with a digital currency. There's going to be a reevaluation of what is your dollar really worth. You're going to get this many digital credits. So there are a lot of unknowns taking place right now. And there's nothing wrong with sitting on the sidelines waiting for this huge correction and things to unravel. Even if it took 18 months or 2 years, you'd rather sit on the sidelines waiting. Now, another thing with the stock market is there will be another rally. This stock market probably will continue to rally. As soon, they're talking now about lowering rates in November, which they were supposed to start doing in March, which we've yet to see. But now they're talking about lowering rates in November. They start lowering rates, that's going to make the stock market rally again. And another thing for people to keep in mind, if you took the big 7 companies out of the equation, Apple, Microsoft, Google, which goes by Alphabet, Amazon, Nvidia, Tesla, Meta, which is Facebook, those 7 companies, their average return last year was 111%. And if you took their numbers out of the equation, it's kind of like the haves and the have-nots. Yes, these big tech AI companies are thriving, but the majority of companies out there aren't. They're not having record profits and record sales. And it's just a matter of time. The day of reckoning is coming. And the big unknown is, when is that going to take place?
Yeah, when is that going to take place? All right, let's go to, well, by the way, and the average listener for our audience is not in their 20s, by the way. So right. the risk that a 21, 22, 23, 28, 29, 30-year-old takes is completely different than the average age of our audience. Our average demographic is 50 to 55 to 70 something years old. That's our bulk demographic, all right? Those folks, which I'm in that demographic, 55, we can't take a massive hit and then sit around and wait for 10 years for it to come back up. Particularly for some of the folks that are already into retirement, they're on a fixed income, they can't take that hit, which is why, again, I don't give financial advice, I give financial opinion, but that's why they can't be taking the same risks that someone in their 20s and 30s is taking, which is why some of them need to take some, in my opinion, take some profits off the table and put it into something like their gold IRA or physical precious metals as a hedge against inflation, something to get their hands on, that if there's a crisis, the banks lock down, you're moving to massive inflation, hyperinflation, you're able to then pack some of that up, insure it per your instructions, send it right back to Swiss America, and a check would be cut for you on a Tuesday or Thursday. So let's say they're holding $100,000 in precious metals. The price has gone up. They need to replace the hot water heater or whatever, and they only need to get their hands on $2,000 or $3,000 or whatever for a few emergencies. Not that your hot water heater would cost that much to replace, but let's just say you need to get your hands on $2,000 or $3,000. You would tell them, based on today's price, this is how many of these coins I need you to insure per my instructions, ship it back to us with the tracking, overnight it, we'll cut you a check on Tuesday and Thursday, overnight it back to you, then you put it in the bank and go buy what you want. That's what we're talking about here for older people, for sure, right? Middle-aged and up, right, Mr. Weiner?
Well, you're taught. Thanks for directing that older people to me.
Well,
but at the end of the day, thank you. Some things.
Look, you're a wise guy. We only come to you because you're wise, you're experienced. Look, you're hanging out with Henry Ford. You just told us.
Fine wine. I'm a fine wine. But
you're just getting better with age. I mean, you're hanging out with Henry Ford. Come on.
At the end of the day, understand the fact that people, as you get older, it's not about making money. It's about preserving money.
Right.
Right. When we talk about what happens in mutual funds, there's low risk, medium risk, and high risk. They have a common denominator. It's called risk. So what we try to do is create something in their portfolio that has the ability to withstand the slings and arrows of a marketplace. And the problem is when people who are older, like myself, take a hit and are in investments that have that common denominator in it, they have to go back to work. Because that loss that they took, even when their broker can turn to them and say, Mr. Smith, I didn't tell you it was risk-free. Why every time when this happens, and they're asking that broker that question, is gold the thing that doesn't go down? Gold's the thing that goes up. That's why we offer it to people as a safe haven, as it's called, or a security blanket that the founders of our nation created. They put us under gold because they believed in the fact of something that would act as a hedge and a security blanket at a period of time of financial instability. And that goes back to the Roman Empire, because the Roman Empire was founded under gold and silver coins. And at the end, if you ever read the book, The Rise and the Fall of the Roman Empire, besides all the other things that brought the Roman Empire down, their money became bronze coins, and nobody wanted it. It's like paper currency. Nobody wants our U.S. dollars. They want gold.
How about the Confederacy? That means paper money was worthless.
Correct. Exactly. It turned out to be toilet paper, literally.
So in the Weimar Republic, they were literally burning it and wallpapering their walls with it, literally. You can go online and see pictures of that. Look at this headline. U.S. home sellers are cutting prices for the first time in over a year. As I said in the intro, I have friends that are realtors, and houses that were getting 18, 19, 20 offers in a day or two are now sitting with no showings for weeks on end. Just talked to a realtor who manages a big branch here in the Mid-South. Some of her homes that are on the market are priced very competitively, and in a matter of 3, 4, 5, 6 weeks, 0 showings. I mean, this is, but let me just tell you something. People that are in the rental business, because we have a housing shortage here in the Mid-South, and because of interest rates at 7.03%, as soon as you put a nice house, not a dive, but as soon as you put a nice home in a nice area up for rent, they're going like that. And literally in 12 hours, you have a contract and multiple people wanting that one house. That's going on right now in the Mid-South because I follow this market. And homes for sale are sitting. Homes for rent, it's like you would want to have 1,000 of these units, these 1,000 of these houses, because they're renting like that because of a housing shortage in the Mid-South, but also people can't afford to buy, so they're looking to get into rent. So again, this all goes back to what we're talking about: hard assets, gold, silver, land, houses, right? Cattle. Wes?
Yeah, absolutely, Brandon. I mean, who's motivated to list their house right now to sell it, knowing they have to go buy something else at a much higher interest rate? Unless you're living in a state like California, where you could easily sell your home for $1.5 million, and come to some place like Arizona or down south, and you sell your place for $1.5 million, you could probably go somewhere else and buy a really nice house for $750,000.
Excuse me. You can buy some really nice houses here in the Mid-South for $310,000, $320,000. Yeah. I'm talking 3 bedrooms, 2 bath, fully gutted, remodeled, gorgeous, $310,000, and your property tax is going to be about $3,000 a year.
Yep. So unless you're moving from someplace like California, where the real estate is very high, and you're going somewhere lower, those are the people that are selling and moving. But so inventory, people are not listing their homes because they know they just have to go buy something else, like I said, at a much higher interest rate. And keep in mind, I think it's only going to get worse, especially for these banks with the commercial real estate. $1.5 trillion of commercial real estate needs to be refinanced at much higher rates. Some of these properties will not qualify because they've actually gone down in value, so they won't have the loan value, and the banks are going to be absorbing that. And I think it's going to be, even you think about it, what are they going to lower interest rates in November if they do? 0.5 point?
Well, here's what it said now. Mortgage rates increased to 7.03%. So you think it's coming back under 7%, Wes?
I think it'll come back high 6s possibly. but still, I mean, we were getting free money for so long, Brannon, and Mike can touch on this. When Jimmy Carter was in office, what interest rate was on a home back then?
At least you didn't take him back to FDR. That's good. That's good.
Yeah, FDR.
Thank you very much. Thank you. I mean, I would go to Methuselah. I mean, the reality is Wes is right. But I was thinking, I bought my first home back in 1974. I built it.
Is that 1874?
1974.
Oh,
thank you very much. I built it for $32,000. My mortgage payment was $239 a year. I was having a month, excuse me, and I was having a heart attack because I'm thinking I got to make that mortgage payment.
Wow.
The responsibility that people have right now, and the idea of buying a home is not even done on this normal basis that I was raised with or other people. They just go by a shoestring. And I see this so many times right now, even with the people that are making ridiculous amounts of money. Young people right now, between the husband and wife, might be pulling down $300,000-$400,000 a year, and they buy $1.5 million home with a ridiculously high payment. And then all of a sudden the economy crashes and their income gets cut in half to maybe $150,000 to $200,000 between the two of them, and they file bankruptcy because they never should have done what they did in the first place. So that's the instability. I think mortgage rates will come down if Donald Trump is elected. But I think if Joe Biden's elected, they want the rich enough to rent syndrome going on and multifamily housing units going on. And people shouldn't live in a house. They should live in an apartment like in Russia.
That's what they want. They're 15-minute cities. Look at this. Job openings tumble with hiring stuck at 2018 levels. So all you guys in the control room think you're just going to go out and find another job. Good luck, right? Right, Mr. Weiner?
Well, yeah. Plus, you've also got the illegal aliens going into the job force that, I'm hearing today Biden is finally going to do something about the border.
No,
well, it's too little, too late, and whatever it is just a thumbprint on it. It's nothing. The damage is done. It's what are we going to do with what's here? And this is affecting the jobs. There's not enough jobs right now for us, and there's not going to be enough jobs for all these illegal aliens. So where are they going to go? They're going to rob you? I mean, it's
going
to be insane.
I was going this to keep it moving here. Big tech companies unplug stock market from reality.